David, there seems to be a bit of a disconnect between the dollar and the gold. Why do you think the gold is still below that 2017 high?
Well, I think it's going to breach that 1365 level, 1363 level. There are some factors that are pushing gold higher, and there's some wild cards like what's happening. If you look at specifically in the month of December, we did see a big move in gold, and the reason that has happened is because the Fed confirmed they're going to raise rates 3 times in 2018, and they had a rate increase when they were talking about that. So that we're still in that trend, I believe, some tailwind from the Fed. In reference to that, we saw some wild card announcement coming out from China here recently, the beginning of this year, just last week, and Bloomberg News reported that China was halting buying of treasuries and maybe even selling some. So that's causing some help for the gold market to go up. And obviously, on the tailcoats of that, the very next day, Bill Gross, previous founder of PIMCO, announced that we're going to go into a bear market in bonds. So those have caused yields to go up. I think the trade is watching what the yields are going to do. But gold is pretty strong when considering in reference to the VIX. It's usually when the VIX is down, and we're a little over 10 right now, gold actually retracts. And last year, the VIX went down 6% and gold went up 12.6%. So there's a correlation that gold is now not performing in reference to the VIX. And when you look at history, the VIX was 60 in 2008, and gold had a huge run of 70% in 2009. So I think we're pulling away from some of the traditional fundamentals that are driving gold.
That's interesting. I haven't really watched that gold VIX correlation, and I'll start to keep a close eye on that. I'm curious with, again, for gold in 2017 in a very low inflation environment, what does gold look like as rates start to rise, and if we see a higher interest rate environment, a higher inflation environment?
Well, I don't think we're going to see a really high interest rate environment. The Fed's criteria to assess inflation, personally, I think it's a flawed inflation index that they use. The personal consumption expenditures, it doesn't factor in oil. And look how much oil has gone up. Doesn't factor in housing. And medium housing starts were up 6% last year. So when you look at that number that they use, the PCE number, they use it as a falsified index. But when you look at the history of inflation, that number went above 4%. They're using a target of 2%. And for 9 years, and during the 70s, the PCE number was above 4%, and it spiked to 10%. So if we have those numbers again, and I don't think we will for quite some time, quite a few years, but I think we're going to move towards inflationary environments, that will cause gold to move up. Last year, we had 5 cycles in gold that if you timed it right, you could have made some money as a trader. And when you look at that, they lasted short-term 29 days, long-term 58 days, 6.4% and 11.2% on the low high of those trends. I think we're going to see some volatility in gold this year. I think it's not a one-way path upward like we saw in Palladium. That's just a huge market that moved 55%. But gold is going to be a little bit choppy, and we're seeing some headwinds right now.
So, David, I was in Asia last week, and traditionally when I'm in Asia, people are often talking gold, very popular trade from that side of the world. Ironically enough, is Bitcoin came in. So I have a question for you. Has the Bitcoin trade taken away any of the luster from the gold trade?
Well, I think a little bit on the consumer level, but the demographics of a gold buyer is the number one buyer, obviously, is central banks, and that's Bitcoin and the cryptocurrencies are actually competing against what their fundamentals, what they believe in. So, normally we don't see this huge influx of money pulling out of gold going into cryptocurrencies, specifically Bitcoin. But I think that on a consumer level, we're seeing some of that. On a side note, they don't really relate, but Bitcoin is here to stay. So is cryptocurrencies. The trading side of it has been enormous, really parabolic. And, I don't think you're going to see gold do that. So if people are looking for those same types of things, I know there's people in my industry that talk about a big parabolic movement in gold. I'm a conservative. I don't see those things. I see higher prices, but not parabolic movement like a cryptocurrency. One note to be careful of in Bitcoin, something that the news is really not talking about. The IRS, and I said this over a year ago on national radio, I said the government's going to come in and regulate the cryptocurrency market, specifically starting with Bitcoin. And last month we saw that there was a lawsuit that was won by the IRS, 14,255 accounts that traded with Coinbase. And we found out that only 802 reported gains and losses. So people are hiding money in Bitcoin and cryptocurrencies. My advice is if you're going to trade in the cryptocurrency instead of gold, do it with small amount of money you're willing to lose, and don't do it to hide money from the government.
Yeah, it seems to be the best entrance there would be with disposable income, that's for sure.
Yeah.
Seeing some volatility there, though, as Bitcoin's coming off a bit here recently. Real quick here, I'm curious, what are your thoughts in terms of the Palladium, in terms of the Platinum? Now, I was recently reading that they're actually interchangeable. It would take a little while to get some of the machinery up to where we're seeing some of the, to where it could actually produce some of the catalytic converters from the Platinum. But is it true that those two are actually interchangeable?
They are somewhat interchangeable. The Palladium market is more jewelry based, and jewelry production or jewelry demand, is down considerably over the last 4 years. And Palladium didn't have a big movement in it last year, so I don't see a huge movement happening. Because the demand side, there is some usage, though, in the catalytic converters, and especially in the diesel industry and the engine side. Right. But Palladium is the #1 component that is used in catalytic converters, and 78% of the production last year specifically went for catalytic converters, and 67% is the norm of production. So we have a higher amount of Palladium going towards catalytic converters. This is due to what I said previously on the program. We had huge hurricanes that hit our coast and also the Caribbean, so they had to replace automobiles. Automobile sales are up huge. I think you're going to see Palladium continue to move. China is on a buying spree of autos, and on the short level, I think we're going to see what Johnson Matthey said. There's a shortage of 800,000 ounces of Palladium, and Citi said there's 1.1 million ounces of shortage of Palladium. So I think we're going to see higher prices in Palladium. Maybe not as much as we saw last year at 55%, though.
Interesting. Good take on the metals there. I appreciate it. This is David Fischer of Landmark Capital. Thanks for joining us here today, David. We look forward to having you back on the show.